Hello everybody. In this video I'm going to be taking a brief look at Nike, and I'm not necessarily going to be taking a deep look into their financials, but more so just giving a general outlook for the company and the overall industry. And I'm actually doing a video on all of the companies in the Dow 30, so be sure to come and check out that playlist on my channel if you are interested. So here I'm taking a brief look at their 5-year chart on Yahoo Finance. We can see that just 5 years ago they were at about $56, and at the beginning of this year they were $105. And with 5 years ago they were already an extremely well-established brand, and they've nearly doubled their stock price, so they're obviously doing something right here. And on top of that, retail sales have generally been really bad for many companies out there that strongly rely on retail and big box stores. So with their stock price nearly doubling, that's extremely impressive for Nike to accomplish. Here, there's nothing remarkable about their revenue and earnings for the last 4 years. Revenue and earnings have been relatively steady. But here's what's a little bit more worrying to me. It's that in Q2 of 2020, they had negative earnings for the first time in many years, as well as a huge slump in revenue. And this is mainly because of issues with COVID. Although they have done a ton to ramp up their e-commerce sales, they still over 50% of their sales are through retail stores, and with retail stores being closed, they're not able to get their products out there to their customers. And I also wanted to talk about a few points by the Bulls and the Bears from analysts at Morningstar, or positive and negative points. The first point here is Nike has a great opportunity in fast-growing markets like China. More than 70% of Nike's growth over the next 5 years may come from outside North America. And that's extremely great for Nike. I don't even really know how much more growth they can have here in the United States, but I would say at least half of that growth is going to come from Asian markets, not even all of it from China, but some of it from countries like Laos and South Korea as well. And then the second point is Nike's triple-double strategy of increased innovation. And to be honest, I really don't know what their strategy of innovation entails. And then direct-to-consumer sales, which have really ramped up here in the last few months with retail sales on the decline. And lastly, speed with just distribution and production may improve and will improve gross margins. And then kind of going off of that, membership growth and their digital channel has exceeded expectations, which is obviously really great for their e-commerce and is really going to be necessary for the company to continue to grow. And then on the flip side of that, I want to talk about a few points by the Bears, or some negative points. The first one, COVID has forced the closure of Nike-owned stores and those of its wholesale partners, which may honestly not be the worst thing in the entire world. So as you know, big department stores and retail stores are in a lot of trouble and have been on the decline for over a decade now. So Nike has really had to ramp up their e-commerce production and channel. So this is kind of a blessing in disguise. And it's really forcing them into e-commerce because there's no other option available. And then this second point I've really kind of already touched on. Nike is exposed to changing retail landscape, but they are adapting and changing and overcoming those challenges. And then the last thing I wanted to cover is their research report overview here on Robinhood. They're given a 3 out of 5 stars for their Morningstar rating, and I think a lot of that is because their uncertainty is medium right now, which I would agree with. And although Nike has been doing extremely well, they have not really shown yet that they can dominate e-commerce by themselves, because Under Armour and Adidas have really been ramping up production for e-commerce in particular as well. And then fair value, they're already back close to their fair value, which I think is why they're only given a 3-star, but they do have a wide economic moat, which is not something you see really often here on Robinhood, and it's partially because of their really, really strong brand known throughout the entire world. And I would normally dive into a couple of these a little bit further in the research report here, but everything seemed pretty standard to me, other than I was a little bit surprised about how much they were growing in the Asian markets, which is a really, really huge growth opportunity for them. Let me know down in the comments if you have any questions. Thank you so much for watching, and subscribe for more content.